Welcome back, everybody. Today we're going to analyze advanced micro devices, ticker AMD. Past 5 years, they're up 460%, absolutely massive growth, way outperformed the S&P 500. Right now, they are trading lower from their peak. Their peak was actually at $207 a share, and now they're trading at 154. This is a very volatile stock. At its peak in November of 2021, it was at 155, and it had dropped down to a low of 55. So lost almost 2/3 of its value over that course of time, and now it's regained back up 3 times. So yeah, it's pretty crazy volatile stock, and the reason why is because this is a growth stock, and the traditional value metrics don't really apply to this one. So that's it's tough to value this stock because of that, but we're gonna do our best. And yeah, AMD, they make microchips and whatnot for gaming computers and data centers and stuff like that. And they're also trying to get into the AI space to compete with NVIDIA. They are a massive company, $250 billion company, absolutely insane. And their price to earnings ratio right now is 294, at least for the trailing 12 months. Um, super, super high price to earnings ratio, but that's because their margins were so low. And also, I mean, their revenue is kind of low compared to their market cap as well. And we'll see. We'll see. $250 billion company, and their revenue last year was 22 billion. So they're trading at a price to sales ratio of like 11. Very, very high price to sales ratio. And yeah, their gross profit is 8 billion, but then they have to spend a lot of money on R&D to stay relevant. If they don't spend on R&D, then they're probably going to get passed up by Nvidia. So they spend 6 billion on R&D, absolutely massive expense for them, and then selling is 2 billion as well. Um, Also, one thing to notice is this is a cyclical industry. In 2017 to 2018, they grew by 23%, but then from 2018 to 2019, they only grew by 4%. And that was probably because of cyclical downtrend in chips. And then they grew a lot. They grew a lot right out of that, and from 2022 into 2023, they actually didn't grow at all. So yeah, it is cyclical, and the analysts are actually expecting them to grow quite substantially into 2024 and 2025. Not quite sure where they're drawing those numbers from, but it's just a prediction into the future. Pretty difficult to make those predictions. So we leave it to the analysts. And yeah, pre-tax income was pretty low compared to their total revenue, and so their margins were pretty low last year. But the analysts, they're expecting that to change. They do a lot of stock-based compensation, so their cash flows are actually pretty good, whereas their net income is lower. Taking a look at their balance sheet is amazing. Negative 2.7 billion in debt, super good balance sheet. In terms of cash flow, what are they doing with their cash? Well, they're buying back some stock. Luckily, they haven't really bought back a ton of stock in 2023. But in 2022, they bought back a lot of stock, and in 2021, they also bought back a lot of stock. And I did take a look at the quarters as well as to when they were buying, and they were pretty much buying stock like right at the peak here, and like right into here, they were buying back stock here, and then they didn't really buy back as much stock at this trough, which is kind of concerning. They're really buying back stock at like not optimal times. Although luckily they haven't bought back a lot of stock in 2023. Well, actually, that might not be the greatest thing either, because I don't know, maybe they're buying back a lot of stock now, which wouldn't be good either. Uh, but yeah, the thing is that they were buying back a lot of stock when they were actually pretty high. So I actually took a look at their presentation as well. These are their products for AI that are supposed to revolutionize the industry and, I don't know, increase their revenue a lot. So they're going to compete with NVIDIA with these chips. Not quite sure what they do. It's pretty difficult for me to understand, pretty difficult for me to analyze, because I'm not really an expert in the chips industry. And they've got leadership data center accelerators, I guess. And so they've got some big customers like Microsoft and Meta for those. One other thing is their revenue from the data center, 6.5 billion. So they've got revenue from data center, client, gaming, embedded systems, and other. But their growth in the data center business wasn't really that much. They actually declined in revenue on their client side, and they also declined in revenue on their gaming side, and then they increased in revenue on the embedded systems. So kind of interesting to see that split. They're pretty split evenly among those four different sections of their business, and they haven't really seen a lot of growth from the last year. Over to the analysts. The analysts are expecting massive growth into 2025 in their earnings and also in their revenue. 26% jump seems very optimistic, I would say, but who knows? It's possible. In terms of stats, they're 2% short, which is higher than some of the other tech giants, but not that high, so it's not that big of a red flag. I plugged the analyst estimates into this DCF model, which I think were pretty optimistic estimates because they're predicting 3.41 earnings per share in 2024, which is 5.5 billion in earnings. That's what they're expecting, and they only had 1 billion last year, so they're really expecting a big earnings jump next year, and then even the year after that, they're expecting that to grow 30%, and so they're actually predicting like a 22% profit margin. That's what that comes out to. Yeah, pretty high profit margin, especially when they haven't done that in the past. In the past, well, they had 2 years where they actually had 20% profit margins, but they had to spend a lot of money on R&D, and also the competition with NVIDIA has been hurting their margins a lot. So yeah, I guess they could get back up to 25% margins based on the fact that they've done it in the past. I don't know if they'd go past 25%, but they could get back up to 25% margins and growth. The analysts are projecting 26% growth into 2025 for revenue. And I just have that tapering off from there because once you're such a big company and you're already selling in a lot of different spaces, then it makes it more difficult to sell like an exponentially more amount of product. And so that's why growth usually stalls once you're a larger company. So, and I have an exit multiple of 25 because it is a tech giant. They do sell chips. I think they've got a long runway for growth into the future. And so that's why they command an exit multiple fairly high at 25. My discount rate is 10% because I want 10% return on all of my stocks. And even with this, which I think is optimistic, revenue projections, then the fair share price is still $129, with them trading at 155 right now. I would say that they are overpriced at this time. If you bought them today, what type of return could you expect? Maybe 8%, maybe 7% probably. I'd say if you bought them today, you'd be expecting a 7% return. Remember, this is a very volatile stock, so it's definitely possible this stock like really drops a lot, and maybe there will be better buying opportunities that present itself. So I'm not currently buying at this time, definitely not, especially because I think the analysts are kind of like way off on the projections, but maybe they're not. They seem very optimistic to me, so let me know what you guys think in the comments, what you think of AMD, and yeah, also any requests in the comments, I'll try and do a video on. And yeah, I'll see you in the next video.